Welcome, everyone, and thank you for joining us for our 2020 Landscape in Focus series and the first FBAA E-Summit here in Victoria and Tasmania. I'm your host today and MC. My name is Desmond. I'm the state president for FBAA in Victoria and Tasmania. Let me just start by acknowledging these are really challenging times and we are all going through it at the same time, and it is important for us to support each other. The FBAA wanted to still be able to provide service to its members and be relevant in these times. And as we are not able to provide our face-to-face PD summits, we are bringing these e-summits to you today. Before we get started, there are a few housekeeping announcements to make. There is one CPD hour allocated to each e-summit session here in VicTas, and you'll be receiving an email with the CPD code following the end of the webinar. So please tune in throughout the whole webinar. Before we get started, I would like to extend a huge thank you to our sponsors for their support, as without them, it wouldn't be possible. You'll be hearing from them throughout this webinar, and please do not hesitate to reach out to them. They are here to support you. Just a quick reminder to FBAA members, you can help the FBAA by recommending your friends to become a part of the FBAA, and each successful referral will get you 10% discount on your next annual membership. Please also download the FBAA app to easily allow access information and upcoming webinars to register. Just a reminder to FBAA, we have also launched the broker support program that is available to anyone to access via the website. And there is a lot of relevant material pertaining to the COVID period and beyond. Please also be advised that the agenda for today's session is attached as a PDF in the handout tab on your GoToWebinar control panel, and you can download and follow the schedule for today's e-summit for session 1. Without further ado, let's welcome our next presenter, Michael Balshaw from ALI Group. Michael will be presenting on loan protection plan, good for clients, good for business. Welcome, Michael.
Good day, Bernard. Thanks for having me. Yeah, thanks to FBAA for allowing us this time. I'm going to share my screen with you, and hopefully it all works very well for everyone. Just getting that set up now. I think we're good to go. Okay, hopefully you guys can see the screen. I am going to be taking up about 10 minutes of your time today. I trust some of you are even having a bit of a FOMO moment right now if you're not diversifying your product offering and service. Never mind, we're here to help you get over it. In the next 10 minutes and roughly 10 slides, I'm hopefully going to give you some compelling reasons to consider diversifying. Why protect your clients, why ALI, and why do it now. I'm sure a lot of you remember the good old days when we were allowed to get out and go on holidays. Having breakfast in a hotel is one of my favorite things to do. It's great because you can have as much as you like when you like. It only depends on your capacity. If one of the cereals runs out, there's always more, unless you get there too late. The only problem is if you've only got one favorite cereal, if that runs out or if it slows down, if there's delays or if there's blockages and you can't get it out, you're going to go hungry. So if you're not doing it, if you're not diversifying, obviously other people are, and it's only a matter of time before they start talking to your customers about their home loans. Obviously, it gives you guys an additional income stream, whether it's commercial, asset finance, or risk products. And you guys can go and pull those levers when you need to. Sticking with the breakfast theme, obviously don't put all your eggs in one basket. You know, hedge your bets. don't leave any money on the table. And if I could con a new phrase, diversify or die. A little bit about ALI, which has led us to become the leading provider in loan protection. As you can see from this slide, over 200,000 clients have been protected. That's through the help of brokers. So, you know, over $60 million in commissions have been paid to them. But more importantly, we've paid out over $100 million in claims. If you can have a look at the NPS score there, pretty impressive, 79.7%. That means that roughly 8 out of 10 people will actually promote and be advocates for our products and services. So our mission at ALI Group is to protect Australian home and property buyers from financial hardship. This lies at the very core of everything we do and is made possible by brokers. Together with our brokers, we hope to make loan protection synonymous with mortgages, i.e. a core part of the process, like you buy a car and take out comprehensive third-party insurance. Our mission at ALI Group, as I've said, is to help protect people, and that there is, when it comes to financial advice, there's a huge gap that you can help fill by offering loan protection to your clients. Now, most people will have some cover in their corporate superannuation, whether they've got some life cover in there to cover their annual salary, and they might have some savings, some funds stuck in there. The average is around about 200,000, and some other people who can afford it will obviously have seen or will go and see a financial advisor and are prepared to pay for that. But there is a huge gap there that don't have enough. So if the average is about 200,000 in super and they're taking out a loan for 500,000, you can see right there and then there is a big gap. And with about 60% of people, you know, taking their loans out through brokers, there's a huge gap that you guys can help service. So your responsibility as a broker goes beyond helping your clients find the right loan. We all know that bad things happen to good people. Nobody is immune from suffering job loss, serious illness, or even death. In fact, a third of our claims are paid to people under 40 years of age. Alarmingly, 1 in 2 men and 1 in 3 women will be diagnosed with cancer in their lifetime. And an Australian suffers from a stroke every 10 minutes. The scary thing is that according to the latest Roy Morgan single course annual survey, there are 1.9 million mortgage holders who don't have any existing protection. Right now, in this current environment, people need less convincing of the importance of having cover and the likelihood of something happening to them. They just need to be informed and given the option to take out some cover. Our products, and as you can see, include 3 major benefits. There's a death and terminal illness benefit. There's a living benefit, which helps them with financial support during time of medical crisis, and an involuntary unemployment benefit. The clients get valuable time to review their cover without having to pay a cent, because the first 30 days are complimentary. And what you don't want your clients to confuse it with is lender's mortgage insurance. I've got a slide here with all our, well, not all, but our quarterly claims that we release and that we publish. And this is why we do what we do. I always think when I see these reports come out, how grateful these people must be that their broker had a conversation with them and gave them some good reasons to take out some cover. What you can see from this, and if you can see clearly from the reasons for claim, cancer seems to be the most prevalent at the moment, even more so than on previous quarterly reports that we put out. And more people are surviving. So there's a lot of living benefits being paid out where people have had a trauma and are able to access some cover to help them through that time. Obviously, people are surviving, and that's why the living benefit is paid out more often than not. The duration of the policy is interesting. So if you look at the column down there, from 9 months to 14 years. So you can see this is a product for the long run. It's sometimes can be used immediately, but more often than not, it's as your clients get older and their risks increase, so they may suffer from an illness or trauma. And if you look at the time that they take into pay, the money is made available when it's most needed. Now, obviously, there's something in it for you as well. On average, the lifetime value of a joint policy, we pay brokers around about $1,400. And as I mentioned before, it is an excellent way to generate a little bit of an extra income. If you look at the time taken compared to the time that you're spending on your mortgage documentation and preparing and liaising with your clients, a little bit extra time can help you generate a little bit extra income. Now, to get authorized with us is a very quick process. You just need to submit an expression of interest on our website, which is aligroup.com.au. You'll have a discussion with an ALI representative. You complete an online application form, and you'll have some online training that you'll do. And then you'll spend some time with one of our BDMs getting some training that will actually help you implement it as part of your process. So we'll make sure that we can help you adapt it to how you operate. Thank you very much for your time. I hope I haven't gone too much over. Well, I think we're spot on, and hopefully I can refer you back to you guys. Back to you, Bernard.
Thanks, Michael. That was really informative and very relevant now than before. Now moving on to the next, we'll see an update from our sponsors, FBAA.
Conducted by our experienced industry trainers to make learning interactive and enjoyable. These classes are not webinars, so you have the opportunity to ask questions and discuss topics with our trainers and other students. Sessions are available for those seeking to complete their finance broking qualification. We are also running complimentary 3-hour recognition of prior learning classes to assist existing bankers and brokers to gain their qualification more seamlessly. Take the opportunity to upgrade to your diploma starting today. Register your interest via the virtual classroom banner found on our website.
For more information on AAMC, please get in touch with them. The next is our finance lenders panel. And without further ado, I would like to welcome our MC for this section, Peter White. Welcome, Peter.
Hey, Bernard, how you going?
Good, Peter. Good to see you.
That's
We've
right.
got
likewise,
our member, Franco from Prosper, Mark from Finstro, Cameron from Strive Financial, Surinder from Trailbook Loans, and Ebony from Bluestone.
G'day everybody, how you going? Good to see all our panelists are here, and apologies to all. Like everything, there's always a little technical hitch along the way, but we're pushing through it. So thanks Bernard for the introduction, and welcome to our panel. What we'll do this morning is I'll ask you a series of questions, and because we're doing this through technology as such. I'll ask you individually the questions as we go through. I'll call you out individually anyhow, and that way we won't wind up talking over the top of each other and making it difficult for those who are prepared to hear or here listening to us. So I guess what I'd like to do to start with is to get a 30-second snapshot. Now, this is going to be really hard for Mark Anderson, because I've asked him to do this before. I'm yet to see him hit the 30-second mark. But try and get a 30-second snapshot of who you are and what your key position is in the marketplace. We'll come back for more detail later, but just who you are, as far as your company, and we can all see your name, and what your key position is in the marketplace. So I'm going to run off my screen. So Franco, I might throw to you first for that. Just a quick 30 seconds, and we'll come back for more detail later.
No worries, thanks Pete. Hi everyone. So I work for Prosper. We're a short-term unsecured cash flow lender. We've been in the market for, I think, going on to 8 years now, and we were publicly listed last year.
Excellent. I'll move across to Surinder. How's life? Are you getting oxygen over there in Western Australia? It's a long way away.
It is, and I can't leave the state, which is even more worrying. But anyway, Surinder from Trailbook Loans. We still do what we've always done, really simple. We lend to mortgage brokers, financial planners, and real estate agents, secured by their rent roll, their client register, or their trailbook. So still lending, and that's what we do, haven't changed.
Good on you, buddy. And I'll jump down, on my view anyhow, down to Cameron. Mate, how are you going down there on the Gold Coast? I trust you're, I don't know about you, I'm suffering with the cold weather in Queensland at the moment. It's about 24 degrees. It's getting a bit brisk.
I agree, Whitey. Had the heater on all day yesterday. Got the slippers on. Outstanding. Mate, Strive Financial, short-term lending. We have a few different products now with the new company, but anywhere from sort of a week through to 3 years in our longer-term products. So same as always, mate.
Well, excellent. And Ebony, welcome. How are you going?
Good. How are you?
Good, Doug. Good. Give us your 30-second snap.
My 30-second snap. So Ebony from Bluestone Mortgages. I'm the state manager here. We're still lending. I guess we're like a one-stop shop where we can do sort of customers in the prime space, near prime, and specialist plus space. So normally there's one product that'll obviously fit the products, and I guess we're more designed for self-employed customers as well.
Excellent. We'll come back for some more info on how you're going too shortly. And across to Mark Anderson. I'm going to set the stop. Oh, I haven't got a watch on anymore. That's typical, isn't it? Yeah. New COVID period, no watch. Go for it, Mark. Give it a roll.
Hang on a second. Start now. G'day, Mark Anderson from Finstro. Glad to be here. We're a specialist financier in the small business space. Nothing too much has changed with us. We've got a lot of focus on our existing clients, but still happily welcoming new deals. 14 seconds, Pete.
14 seconds, mate. That's a record. We're going to have to give you an award for that one. Mark has a habit of the longest intro of anyone. It's all good, though. Buddy, I'm going to stay with you for the moment and make up for your 14 seconds. We'll pad that out a bit more. COVID-19, and this is a question I'll come back to everyone, has really thrown curveballs around the marketplace. I can remember 8 weeks ago, I was still on target for doing more than 220 domestic flights this year. And then I sort of slammed into a brick wall and everything just shut down and stopped. Had to reposition staff to work from home, change all how our educational pieces work, change the interactions with government. Lenders had to change and move around. Everybody had to stop and do something different somewhere, somehow. How did COVID-19 impact your business there at Finstro? Did it at all? Or we expect lenders had to move LVRs and maybe go into a little bit of hiatus, but that's life. So what was the impact of COVID for you guys? And then where does that now stand today?
One of the things that happened very quickly with us, to the credit of our CEO, Brad Prout, and the executive team, we moved very quickly into making sure that staff were looked after. So like many businesses, we sort of moved to a work from home situation. the IT department worked very hard, and our technology was put in place very quickly to allow multiple daily management meetings and staff meetings. So you see now and then where you have photos on LinkedIn of 60 people on webcams, a little bit like this. So we have that type of thing. So we haven't lost momentum, if you like. We've actually retained a lot of contact with staff. One of the other key things that our business did was place an immediate focus on our existing clients. We started a proactive outbound campaign to all of our clients, where all of our clients were called just to discuss with them how they were situated and how this has affected their business. Did they need any support? So very early on, we put in a variety of support packages so that clients who are seriously affected could take a deferred installment program for perhaps 3 or 6 months and then have an extended term to pay the facility off. So I think what we did was we moved very quickly to look after staff, to maintain business continuity, to look after our existing clients, which we're still doing to this day, and we're still accepting new applications and doing a reasonable volume of transactions from our existing client base as well. I think we've sort of developed, like most, greater comfort with technology that allows meetings and days such as this to get across everything we need to.
Sure. Were you able to continue lending throughout that initial period, and are you still lending now?
Absolutely. We've not stopped lending. We are accepting new applications as well as still lending to our existing clients. New applications has the lead volume has dropped off a little bit, but nevertheless, nothing really much has changed there. Probably the main criteria, or really the only criteria that's changed with us, is moving temporarily from a 6 months ABN registration to 2 years. But as this sort of finds its way and settles down, I've got no doubt we'll be going back to normal in a more competitive arrangement. Our existing clients who are not suffering, you know, I suppose like most lenders, we've got clients who are finding it difficult, and we've got other clients who've maneuvered very quickly to create online opportunities. Or a lot of clients that I've dealt with have actually received back orders of their inventories from China that they've been waiting for work for December, January. So I've actually seen quite a bit of that, where businesses are absolutely flat out trying to backfill their orders, if you like, because their inventories have arrived. So absolutely, momentum is still there with our business. We want it still there, and we're still totally focused on the broker channel.
Mate, that's excellent stuff. So great to hear. And it's good to see that you guys are being able to push through all this, and that things are looking at coming back online pretty strongly as well in the current marketplace. It's fantastic. Ebony, I'm going to go to you, and same sort of question. How did you guys go there at Bluestone through that period, and where has it landed today and going forward?
Yeah, so we were, same as Mark, I guess, we're really proactive with getting all our staff working from home and getting everything set up. I think we were potentially one of the first lenders that came in with some of the restrictions, which we may have copped a little bit of flack about. But we did email all the brokers out everything of our changes. We wanted to be completely transparent, I guess, in what our appetite was. We didn't want to waste the customers or brokers' time in submitting deals through if we weren't going to have an appetite for them. So they knew exactly black and white what we would have. So we restricted some of the LVRs because we had 90% LVRs with no risk fee, no LMIs. So we restricted some LVRs, restricted some income, and shaded some rental income. And I think we did that to basically protect ourselves so that we can basically come back into the market really strong. We were still lending the whole time, and we still are. Yeah, and I think we made the right decision. I guess back from March, we had 10% of our book already go straight into hardship, which was 18 deals, and that's due to them losing their jobs. And these are deals that have just settled in March. So we got the results in April. They lost their jobs. It might have been that they bought an investment property and they can't find a tenant. So again, they don't have the money to be able to service that loan, and it could be self-employed, etc. So it was a high number. I think we made our decisions to sort of go around that. So yeah, but we're still lending, and yes.
That's excellent. I mean, you know, in these times, the rules always change. I mean, after being in the industry for a little while, I went through the GFC and that many recessions I can't remember. Things have to adapt and flow. And so long as everybody's kept well informed as to what that is, it's business, it's life, and we keep going. That's such a great thing that Bluestone and you guys have done in your communication piece with brokers. If things do move a little bit, it's important to know, and things will come back around as the COVID-19 restrictions and businesses start to flow again. And it's important to have that positioning piece right and being able to do whatever it is one can do. So, and that's different for all of us. So, fantastic stuff, and congrats, Bluestone.
Yeah, and I think people might have thought we might have got out of the market like we did pre-GFC, so all these rumours going out, but we're actually in a really great position. We have different owners, which is Cerberus Capital Management. They're a $1 billion private equity firm, so we're really well backed, so we're not obviously going out of the market anytime soon.
Yeah, excellent. All right, Cam, over to you, buddy. How are you guys gone? And you're in a different space to a lot of people, and in the private space, in that commercial sector, and it's moved around a bit. How you guys gone in through that initial period and where you are today?
Yeah, not too bad, Whitey. We're obviously a small family-run company, so it's my little sister, her husband. We got out of the office sort of environment pretty quickly, and we're just both back in our own units working from there. We've had to work with some clients, but a lot smaller percentage than we first feared. And I think with a lot of this, it's been the anxiety, I guess, of the unknown, because nobody really knows where it's going or what's happening. So, yeah, obviously when it first happened, there was concerns around, well, how many of our clients are not going to be able to pay. The number's been pretty small, really. I guess our biggest impact from it is that we can't deliver any longer on what we promise around the 24 to 48 hour stuff. It's physically impossible. Now that I can't get on an aeroplane to fly to Perth to meet the client or fly to Sydney to meet the client, you can't turn money around like that when you're lending against mortgages. When you need mortgage documents signed, it doesn't work. And even little stuff that has been really big for us, Australia Post now only deliver twice a week letters. Express Post is no longer Express Post. There's no guaranteed next day delivery anymore. So we did sign a client up in Sydney a couple of weeks ago where they sent the Express Post document on Wednesday out of Sydney, and the next Tuesday we still didn't have it back on the Gold Coast. So there's 5 days gone before we can fund anything, before we have that mortgage back that we can then lodge on PEXA. So it's been difficult for us in that sort of sense, being able to turn things around quickly. I guess because we're security lenders and we lend against second mortgages or what have you, at the end of the day, our lending decision is on what we think property is going to be worth. And right now, anyone that tells you they know what property is going to be worth in 6 months' time, I think they're making it up, because none of us know. Let's be brutally honest. Is it going to drop 10%? Is it going to drop 20%? Is it going to drop 25%? Who knows? Nobody knows. So I guess it's more difficult for us making that lending decision and then being able to deliver what we promise, which we've always been really strong on, is very, very difficult. So we are still lending and looking at applications. Can we turn around in 24 hours like we promised? No. There's always great opportunities out there at times like this, but so there are still the right deals out there to be written. Would we write a loan to a cafe that wants to start a new cafe down the road? No, probably not. But we've lent to a guy that's got a hotel and he can't have clients in there at the moment, so he wants to refurb the rooms. Now, instead of having those rooms empty when people are allowed in there to refurb them, he's used this opportunity to refurb them now. So there are people out there that can still take advantage of opportunities in this time, and we can still help those people. We just can't do it as quickly as what we once could.
And that's fantastic, mate. It's great to see you guys are still being able to continue to lend. And it's the same as, Ebony's conversation there, is it's all about understanding what the expectations are, what you can and can't do, and people work within them. And I think it's very foolish of anyone in today's marketplace to think that the rules of 3 months ago are the rules of today. They're just simply not. So we've got to maneuver around those sort of things and to understand the expectation, the parameters of which everyone is operating, and then work within that. And I think it's an important piece. So well done. And Yeah, I tell you what, the Australia Post syndrome, it takes forever to get anything from anywhere. I was in Sydney a couple of weeks ago and of course came back and straight into 2 weeks quarantine. So that kind of thing wouldn't help you out, buddy.
Nah, it's listen, it's difficult, mate. It really is. But one thing you'll always get from us is honesty, right? We can do it. We can't do it. We can do it, but it's going to take this long. We're not here to muck anyone around. We got through the GFC. We'll get through this. At the end of the day, we just don't know how long it's going to take or how quickly things are going to be eased back up so that we can start to do the travel or what we used to do.
Yeah, love your work. Love your work. All right, Mr. Surinder. Again, somebody else is in another space again. And mate, you have a very unique offering for brokers in what you do. And how have you gone through the COVID period and where you've landed today?
Yeah, so obviously, just like a lot of other people, the biggest and first concern for us was our staff and our team, making sure that they were safe, doing what they needed to do. Again, thankfully, because we're a small team, exiting everybody from the building was fairly quick and painless, and the tech was already set up, which was fantastic. It left me with 122 square meters to work in on my own, so I didn't have to work from home. So I'm sure my wife and kids are quite happy about that. Yeah, when COVID first hit, we got a bunch of our funding offshore, so there was some scary times and very, very late nights initially when the credit market started to seize with the offshore funding. They seem to have settled down a little bit now. The biggest change for us really is we're still lending, but we're not quite as bullish on rent roll lending at the moment, and probably won't be until August, September. And that's just purely and simply around the mishmashed state-based rental schemes that are available around evictions and things. So nobody knows what a property manager's going to be earning or not earning from arrears moving forward. But mortgage brokers and financial planners, we haven't changed. We are a little harsher on cash out. I just won't give someone some money that says, I want to expand and give it to me. There's some real purpose now behind any cash out for the next period. But apart from that, we haven't changed our metrics. We haven't changed our credit policy or criteria. And if anything, it's not been a bad period for us because it's allowed us to catch up on the systems and ops that we were supposed to do over the Christmas period. So, you know, we're nearly fully up to date again. So not too bad, Pete.
I think there's one or two banks that are trying to deal with their legacy systems at the moment, but that's another story somewhere. But it's a good time to sort a few things out. And but it's mate, that's great. You've come through that well, and still have an offering for brokers who want to be able to leverage their trail books to be able to fund whatever fits within the ticket today. Well done. And Franco, how things are going there in Prosper? One of your staff actually came to international fame. I think it was late February, no, possibly early March, when we did International Women's Day. And on the day before we were about to hold that, your building in Sydney got locked down for a COVID outbreak, nothing to do with Prosper. And there was young Alex plastering a sign on the door for our International Women's Day saying it's been relocated. And of course, there's the FBAA logo. And he's been counted as an employee of ours, and the FBAA has been shut down all across Europe. Fortunately, they didn't get it, but we thought it was funny.
Yeah, we had a
good fun.
Yeah, so I was going to say we had a bit of a scare. It was underneath our offices is MTV, and there was a bit of a worry that someone had it there. So we went into early lockdown and evacuated for a couple of days, but it wasn't. It was a false alarm. But as you know, we're a fintech lender. So we transitioned, when we did actually go into real lockdown, we transitioned 250 staff to working from home and the same SLAs pretty easily. It sort of forced me to learn how to use some of this tech that I've been telling everyone I don't know how to do it. I'm too busy. I'm on the road. I didn't have that excuse, so I know how to use Zoom now, which was good. So yeah, that's from a business perspective. From a customer perspective, we lend to small business, and it's pretty hard to lend to small business when the majority of them have been forced to close down. And there was a lot of panic out there in the market as well. To give you an example, Our collections team generally takes about 500 calls over a month. When we went into lockdown, just after that Monday, I think we received 1,000 calls before 10 a.m. So there was a lot of people not knowing what was going on, wanting to know about hardship and that type of thing. And everyone pitched in from a company perspective. I was actually on an inbound collections call queue, speaking to customers, and it really gives you a good understanding of some people's plight and hardship and what's happening to them at the moment. But we got through all that, and we helped a lot of customers, and we're still helping customers who can't meet their obligations. So that was good. From a company perspective, we are still lending. We're still taking leads. We've made some policy changes to our existing two products, the business loan and the line of credit. But Prosper has also been approved for the government guarantee scheme, so that $250,000. We are currently testing a line of credit and a business loan. We're calling it the back to business line of credit and back to business loan. So we're currently testing that, and we're in phase 1 with about 30 brokers nationally. We're going to move into phase 2, which opens up to about 300 brokers, and then hopefully in about 3 weeks it'll be open to all brokers who are accredited and registered with us to be able to offer that product to their small business customers.
Fantastic, that's excellent, and congratulations on that too, with that funding. I think what people need to understand, that the $250,000 doesn't mean the government gives you $250,000. It's a 50% guaranteed by the government, so you're still going to be able to put on balance sheet somewhere. So look, I'm going to get the wind-up signal very soon. That time has gone really quickly. So what I want to do, and I'll start with you, Franco, and I'll go quickly through each of you for 30 to 60 seconds. Give me the good oil on what your sweet spot is in lending at the moment, and what sort of turnaround times you're looking at. So what is that sweet spot? What are you looking for? You're looking for this, that, or the other, and general turnaround times. And they're general. No one's going to hold you to 100%. But if everything's done properly up front, banging it through, generally, what are the turnaround times looking like at the moment, Franco?
Turnaround times for us really haven't changed, because we're only looking at 12 months worth of bank statements, an application, and the ID of the directors. We still can turn around a $100,000 loan in 24 hours, and our team on the phones can do that application in about 25 minutes, and that's doing the application and getting the bank statements. So that hasn't changed. From a sort of sweet spot, we're looking at essential services, professional services, medical, essential food services, that type of thing that we're looking at. With the government guarantee product, and once we know more about different phases of coming out of lockdown, policy will change. It's changing weekly, and we'll be able to come to the market and say, yeah, we can help restaurants, or we can help retailers that are opening in the near future.
Excellent. Surinder?
Yeah, sweet spot now, Pete's probably more than ever mortgage brokers, and brokers that need funding themselves. As I said before, real estate agents and rent rolls, we're still lending, but we're certainly looking at more harshly. Turnaround times for us at the moment have blown out. Trying to get that efficiency from going from 7 different systems and integrating them into one, you don't get the efficiency as you think you're going to get it yet. So we're probably sitting at sort of 3 to 4 weeks beginning to end. So as we refine the system and get used to the new systems that we're using, and the team get more trained in it, then obviously that will come back. And we have moved very much to a more fintech type of platform, which is good for us, and it will make things easier. The other issue that we're facing at the moment is on docs. So we get external lawyers to do all of our documents, and our lawyers are exceptionally busy with, unfortunately, corporate work at the moment. So we're a little bit behind the queue. So yeah, sort of 3 to 4 weeks. And the sweet spot is definitely mortgage brokers over the other products that we offer.
Yeah, and it is what it is, and knowing what the expectations are all important. And you're in a very specialised marketplace, lending against trail books. It's not run-of-the-mill style lending. So yeah, that's fantastic. Well done. Cam, what about you? Sweet spot turnaround? Oh, well, you've already talked about turnaround times, but generally sweet spot at the moment?
Yeah, Pete, probably our mortgage fund style product, the first mortgage stuff. We are still writing some seconds, but just again, not knowing what's going to happen with property over the next 6 months makes seconds very difficult unless they're low first mortgage amounts. But if first mortgage amounts are 1.1 million, 1.2 million, and then you're looking at lending behind that, it's stuff that we're sort of not really looking at right now. So first mortgage stuff, and like Surinder said earlier, the purpose of the loan is really, really critical now. If it makes sense, then we're still happy to write it. But if it's a cash out for a restaurant or cash out for a cafe or something, then it makes it really, really difficult. As far as turnaround time, you'll still know whether we're going to give you the money or not within probably an hour. We still have you the letter of offer and a decision on whether we're going to write that loan or not within the hour. The problem then is around emailing the documents to your lawyer, you're signing them with your lawyer, and then posting them back, and that's taking 4 or 5 days sort of stuff. So yeah, as I say, turnaround times are somewhere around that sort of week, but you'll still know whether you're getting the money or not same day.
And excellent, and you can do that because you're actually the lender. It's your money in large case, or it's through the fund. You make the decision, you write the check.
Yeah, most definitely. So it's not, the turnaround time has got nothing to do outside of actually getting those documents back and how long that now takes. Now, when I used to get on a plane and fly there and fly back, they were back the same day. Now it just takes a bit longer, even down to things like VOI, mate. They've got to go into the post office and do their VOI and then get an appointment with their solicitor. And as Surinder says, solicitors are busy, and so it takes a day to get in there. Australia Post. Now, Sydney documents went to Mackay before they come to the Gold Coast, so that's how good Australia Post are going currently.
Yes, and there's some tricky things happening with Australia Post. My wife was expecting delivery that wound up going from the Sunshine Coast down to Melbourne to Lord Howe Island, back to Sydney before it got to Brisbane.
Yeah, it's unbelievable.
Yeah. Ebony, sweet spot turnaround times for Bluestone?
Yeah, so we're back in about sort of 24 to 48 hours for assessment. We did blow out. We've never had a blowout before in the whole 6 years that I've been with Bluestone, but we blew out when lockdown first happened to 5 days, which is really out of the ordinary for us. We've brought that back within sort of like 24 hours. Again, it goes on how well the deal is packaged. So if we put all our documents there, then obviously we can get to it straight away. If we're drip fed the documents, then obviously it's going to take a little bit longer. Our sweet spot, I would say, is owner occupied and definitely self-employed. So because we can verify income when it comes from BAS, accountant's deck, and business trading statements or 1 year full financials, we don't need to go with the traditional 2 years tax returns, etc. Then I think sometimes we've been able to help out the self-employed customers, and that's with paying out business loans and unsecured debts, because at the moment a lot of people are sort of racking up their unsecured debts with credit cards and rubbing penny to pay Paul sometimes. So because we can do as like unlimited debt consolidation, that's potentially like our sweet spot.
Excellent, fantastic stuff. And Mark, and as we get to the end of this, and sorry folks, I'm running about 5 minutes over, so I'm going to have people hounding me from my staff for taking so long. But Mark, over to you, that sweet spot. I know you guys got a real diversification of products, but if we can just come back to a sweet spot and turn around and say, this is a good spot for us. What's that look like?
Look, up to $100,000 where SLAs haven't changed. A client over the phone can get a conditional approval within half an hour, and then when they deliver the bank statements, usually within 24 hours, we can offer them a decision on the application, and if approved, the limit. In terms of a sweet spot, I know this is a very general comment, but it's genuinely a case by case. And to give you a very brief example, got a client introduced by an FBAA broker who's got 6 retail stores, and unfortunately they had to close. He maneuvered very quickly, got a website, and in the first month he was trading at 120 grand. So the new bank statements and the history of what his business was allowed us to fund him further. So genuinely case by case, but not businesses who are closed and haven't maneuvered or can't maneuver to create a revenue position for themselves that will support the debt, because obviously responsible lending is still pretty paramount and critical.
Mate, that's fantastic. Well done. So unfortunately, I've got to bring it to a wrap there, but Mark from Finstro, thank you. Ebony from Bluestone, thanks. Cam from Stripe Financial, Surinder, Tribal Loans, and Franco from Prosper. Thank you all so much for sharing. The honesty and candour and the transparency to me is key. And the understanding that we're still lending is a very, very important piece of the marketplace. As things move around a little bit, but that's life anywhere at any time. Thank you all. Stay well. Look forward to chatting and seeing you again really soon. And I'll hand back to Bernard, who will continue on proceedings from there. Thanks, everyone. Bye.
Thanks, Waddy.
Thank you.
Thank you, Peter, and thank you to all the lender panel members. Did it like a pro. Awesome, amazing. Now, moving on to the next one, we're going to see a video from our sponsors, FBAA.
Hello everyone, this is Darren Lodes from Insurance Advisor Net. Just touching base with you all. I hope you're all keeping well through these crazy times that we're all going through. Just a quick grab, the one bit of advice I'd give you in the time that I've got is for those that have got their policies due this month, and I know there's quite a lot of you, maybe this year's the year to take advantage of our premium funding option where you can space the payments out over 10 months rather than an upfront payment, just to help you cash flow through these times. Any other problems at all, you guys know where to get us, and we're here to help you where we can. Stay well and we'll get through this together. Cheers.
Our next speaker, let's welcome Renee from Suncorp, who's the National Wellness sponsor and is presenting on 5 ways to build resilience in times of change. Hi, Renee, welcome. I think you need to unmute.
Is that better? Sorry. How are you, Bernard? Thank you. And thanks very much for having us as part of the FBAA summit this morning. I really enjoyed listening to the panel, and we're really, it's a really important thing that we are part of the FBAA professional development program. This morning, we just wanted to take a few minutes to talk to you about something that we think is really important. And as you would have heard from the panel, the support that you're providing to your customers and what you're needing to do for customers at the moment has changed dramatically, which we're all aware of. But what I think it's taking out of us as human beings is it's really testing our resiliency. And what we wanted to do was, as part of our partnership with the FBAA, is just take you through a couple of tips that we have around resiliency and talk to you about why it's relevant. And this has come from our employee assistance program. We partner with a company called Assure, so we're not a wellness expert, but what I've done is called upon a partner who provides support to our employees and also, at the moment, our insurance customers to help provide just some tips that we think might be quite useful, because we know that as brokers, you're supporting your customers, but you're also needing to support yourself and your families, and it's times that we haven't seen before. So I just want to take you through a quick snapshot of what we covered when we did the Are You OK event towards late last year, and we talked about vulnerable customers, and our view is that customers experiencing vulnerability is a state, not a trait, and the amount of people who are in a financially vulnerable situation now because of COVID is something that we've never seen in Australia. And that puts a lot of pressure, obviously, on you in your role as a mortgage broker to your clients. At the time that you recommended them into a loan, you could never have foreseen the circumstances that they're in. And a lot of the brokers that we're talking to are needing to support customers with the various relief packages from the bank and having some really tough conversations. So what we wanted to do was just cover off that the amount of people who may not actually have contacted you yet, but might be on the brink of needing your support, and the factors that are at play there That 30% of adults don't have savings. 45% of people in Australia will experience a diagnosable mental illness in their lifetime. 25% of people experience anxiety dealing with financial services, and 25% of people can't or sometimes can't pay their bills. And I know that as we've seen in the media with the variety of support packages that are available, all of us in essential services are working together to try and provide the right relief packages for customers to be able to help them navigate this stressful time. However, we know that those customers are calling on you to see them through and provide them with some guidance. So what we wanted to do was just talk a little bit about what resiliency is and why it's something that we wanted to provide a little tip for you today about. And resilience is the ability to positively respond to adversity. It's the process of adapting well in the face of adversity, trauma, tragedy, threats, or even significant sources of stress. And resiliency helps us bounce back from setbacks. It's a combination of learned behaviours and thoughts and actions that can be developed in anyone. And research shows that people who are resilient demonstrate a holistic set of skills across 6 domains. And this slide here shows you a sample of what we think those domains look like. So those domains are vision, composure, reason, health, tenacity, collaboration. And I just want to spend a little bit of time explaining each of those. So vision is having a sense of purpose and the ability to set goals and prioritise the right actions in the face of adversity. There's some mind tools and tips that we'll be sending you following today that are just some simple exercises you can do to identify what your personal values are or set goals. It's interesting, I was talking to my dad the other day because I've had to move temporarily to Queensland. I normally live in New South Wales, and I'm waiting for the go-ahead to be able to go back to Sydney. And I was just saying to him that uncertainty is really hard, and he suggested to me that I just focus on the next 30 days rather than worrying about what may or may not happen over the next 60 days to 90 days. If I just look at the next 30 days, that might take some of the worry and the uncertainty out of it. So I think in these times, it's how do we set some short-term goals that'll actually get us through to put ourselves in the best position to cope with the environment that we're in. Composure is the ability to regulate our emotions and stay calm and in control during difficult or stressful situations. And to help build skills to better regulate your emotions and build awareness, there's everyday mindfulness activities, and we're going to give you one tip towards the end of this presentation that we hope will just give you something to think about if that's something that you're interested in. Reasoning, so the ability to solve problems, think critically, identify unhelpful thinking traps, so that can be catastrophic thinking, black and white thinking, using blaming language. So we encourage you to practice challenging your thoughts, asking yourself if there's another way to think about a situation. And I think you've all heard from the lenders on the panel that it's been really challenging times and we're facing things that we haven't had to before, and having a different way of thinking about it definitely reduces the stress that you might be feeling. Health, exercise frequency, good sleep and healthy nutrition, and we would really encourage you to drink more water. I know working from home you can tend to be stuck wherever you've set up your home office, and they say that sitting has become the new smoke, what used to destroy your body from the new smoking, and keeping hydrated is extremely important. Tenacity, the ability to persevere through challenge and quickly get back on track. So we encourage you to remain and build tenacity. It's to revisit your values and goals and schedule time to just think about what are the things that you're doing that align to what is most important to you about the role that you play for your customers and your family. And collaboration, fostering connections with others and creating a collaborative environment. And it's great to actually be on this call with you today and to see everyone on the video. I think in this digital environment, we can often feel a little bit disconnected from people. So thank you for making the time, because that definitely goes towards the positive feelings that you have about that social connection. So 5 ways to build your resiliency during times of change. These 5 things we've picked are really simple things for you just to have a think about and be able to adapt into your day. And these 5 play into those 6 domains. So a tip that we have is know what is in your control and what's not. To adopt a growth mindset, and that's that different way of thinking about things. Find what work focuses on your strengths. I think in the financial services industry, we've spent a lot of time doing things from a regulatory perspective, and I think the thing that heartens me about this time that we're experiencing, it really shows the value that brokers deliver to their customers, because what I've heard is all brokers want to do is be able to help their customer navigate this difficult time. To practice mindfulness and to take time out to reflect. Now, in the practicing mindfulness, we've got a technique for you that we wanted to leave you with something that you could implement today, and it's a technique called STOP. And what those the acronym stands for: S is for stop, T is for take a breath, O is for observe, and P is for proceed. So how it works is, in a moment, we encourage you to just stop whatever you're doing and just pause. Reconnect with your breath, and what that does is your breath is your anchor to the present moment, and what it does is it brings you back into the present moment. Take a moment to observe. Notice what's happening inside you and outside of you. Where has your mind gone? What do you feel? What are you doing? What are you thinking? What are you seeing? What are you hearing? And then proceed. Continue doing what you're doing, or don't. Use the information that you've gained during this check-in to change course. But whatever you do, we encourage you to do it mindfully. And this technique is just designed to help stop those moments where you might be feeling a little bit overwhelmed and a little bit disheartened. We've also got some extra tips around what are some other things that you can do if you're interested. So we've got some suggestions for podcasts. 10% Happier with Dan Harris. The TED Talks are fantastic. There's a Deloitte series and a Resilient and Real podcast. We'd encourage you to have a look at some wellbeing apps. So there's Happify, Headspace, Calm, the Resilience Project are all fantastic apps. And then we've also got some TED Talks that we've researched that are specific to resiliency. And if you've got some time just to put some different content into your day, I would encourage you to check those out if that's of interest to you. We did want to just take a moment to recap what are we doing for customers to help them, so that you're aware that we are there to back you in the support that you're providing. And we have what's called customers experiencing vulnerability hubs within our business across both banking and insurance. We have COVID-19 relief packages for both SME clients and residential clients, and we've got a dedicated site on our website. So it should be really easy for you to find the information. We also have a link within our broker portal. And if there's anything that you need that we can help you with when it comes to servicing your customers and the support that we can offer, please reach out to your BDM team. But we really just wanted to say thank you for the support that you're offering to your customers. And we hope that just this talking a little bit about resiliency and how it works will just give you some extra tips to be able to bounce through your day with your family and the support that you're providing to your customers. Thank you. Over to you, Bernard.
Thank you, Renee. Very much appreciate your time. I really love the 6 domains of resilience. Just amazing.
Thank you very much.
Okay, now moving on to we'll be seeing an update from our sponsor OnDeck.
Business owners. They're anti-corporate, pro go for it, never stand still people. They're the always on, the ever enterprising, taking on every challenge, but they're not on their own. At OnDeck, we help fuel their ideas with a whole new way of lending that focuses only on your business. We say no to judgment, yes to facts, no to slow, because we're for fast. When the little things matter, we see the big picture, so you never miss an opportunity. Whatever your business, now you can get on with it. OnDeck, the small business loan specialist.
Our next speaker, Donnell from Lend. Hi, Donnell.
Hi, Bernie. How are you?
Yeah, good.
I'll just, my webcam should be on. Yep, we're here. We're on. Nothing like a technical difficulty to get going, right?
Well, we're doing much better.
There we go. Perfect. So good morning to our brokers of Vic and my home state, Tassie. It's great of you to make some time, and fabulous of the FBAA to move this content to a digital platform. So today what I really want to do is just have a quick chat to you about the alternate lending space, why use it, what's happening in the alternate space as far as COVID is concerned. And I'm getting a message, so I just want to make sure that I'm actually working. Am I on, Mariah? Because my webcam is definitely on. Let's have a look now. Is that better, guys? Have you got me now? Let's hope you've got me now. So, yeah, so I just really wanted to have a chat to you about, you know, the SME lending space, why alternate lenders, what's happening with COVID, and then a quick rundown of the actual platform. So let's jump in and have a look at why businesses use the alternate commercial lending market. So there's, you know, quite a few reasons why brokers and clients are moving to alternate lenders. And some of those reasons are that financials are not up to date. So if you don't have your most recent 2 years financials, then unfortunately you will miss out of mainstream banking. We also have ATO debt. So a lot of you as brokers would know that mainstream banking, it looks poorly upon outstanding ATO debt. And we've had quite a few experiences with our broker family where they've needed to actually go to alternate lenders to take out the ATO debt so they can then get the equity out of their property. We also have speed of funding. Now, we certainly know with COVID that even in the alternate space, you know, speed of funding and SLAs have blown out a little bit, but if they've blown out in the alternate space, you can only imagine what this means in mainstream. Flexibility of payments, so daily, weekly, fortnightly, monthly, you know, capitalised interest, interest only. There's so many options in the alternate space. Term flexibility, so the majority of the alternate lending market will actually allow you to pay the loan out early without penalty, which can work really well on some of those higher interest products. So you may only really need it for the first 3 or 4 months. So to pay without penalty means that your client is actually well in front. So it's really worth having a chat to your BDMs or to the lenders out there about looking at that difference of an alternate loan over a short term versus the same amount of money with a mainstream, say, over 3 years. Very interesting conversation to have. We also have multiple loan purpose. So you'll find that, I'll touch on this one as well, product combinations. So you may have a client who's looking for 20 or 25K for equipment, 20K for some ATO clear out, and 15 or 20K for some expansion or just pure cash flow. So multiple loan purposes or product combinations are really difficult to get across the line in mainstream lending, whereas you'll find with alternates, they may offer a line of credit for one side, an equipment product for something else. So you'll find that those combination products are much more common in the alternate space, and obviously in credit and credit impairment. So we know that the alternate lenders are looking at a range of things inside a credit file. So they're looking at what are the defaults, are they paid, are they unpaid, how old are they? Because we know that with inconsistency of credit reporting, that a director with one outstanding utility default may actually register the same score, as a director who has a $700,000 or $800,000 finance default. So alternate lenders are really looking at inside that credit file, not just the score. The other thing is that there's a lot of product choice that not everyone knows about. And so a lot of people just think that the alternate market is for unsecured lending or private lending. So what I want to do with you now is just share a couple of quick, the top 8 SME products at the moment in the market. So we have equipment and asset finance, which we know at this time of year is more popular than ever, especially with the increase to 150k asset write-off. We also have invoice factoring, trade. We have unsecured short-term loans, secured short-term loans, and they're not to be confused with caveat lending or private lending. So a secured short-term loan more talks about an asset that may be used to secure the deal, as opposed to a caveat or private lending deal where an actual mortgage or caveat is registered on the property. Line of credit, we all know that that's a buzzword at the moment and certainly can be very helpful during COVID. And overdraft facility. So again, a great way where you can manage your money, pay your wages out each month, pay your suppliers, and it really operates just like a bank account. And last but not least, the merchant cash facility. So again, we have lenders on the panel, on our panel, who cover all of this product range. So there's lots of ways that your clients can tap into getting capital for their business, and it doesn't always have to be seen as that unsecured cash flow loan. How do you get into the market? We're not really going to, get into the whole diversify or die conversation today. We all know how that works. But look, 4 quick tips to start to enter the market is, as a residential, property broker, you will find that you have written more than one, probably more than 10 home loans for clients who are self-employed. Get an email, get an SMS out to that book. Tap into your other professional alliances. We're seeing more and more accountants, lawyers, financial planners and advisors questioning and wanting to know more about the alternate lending market. So tap in now. Get yourself a dedicated landing page. It doesn't matter if it's not your main form of business. What you need to do now is be able to recognise that there is potential for a deal, be able to take that deal and monetize it. So definitely get a landing page that directs business loan traffic. And last but not least, we've all got very good at this over the last few months, but certainly, get busy in your social, get busy in LinkedIn, get busy in Facebook, and really get the message out there. So just a quick COVID industry update for you, and with our panel of lenders. So we just wanted to let you know that we have just some ideas to help you around industry restrictions and possibly just a way to help determine where your client may sit and how easy or how long the approval and application process may take. So without being too obvious, you've got your gold industries. So they're industries that have continued to trade strongly during lockdown, supermarkets, transport, healthcare professionals, professional alliances. So they're still able to be assessed exactly today as they were before. You then have your silver industries. So they're industries that have continued to trade in a limited capacity with an expectation to return to pre-COVID trading or even better. So that may be your cafes who have moved to takeaways, or, your manufacturers who are now moving from, creating suits to making face masks. So people that are still trading. And then you've got your bronze guys, and these are the guys that are going to be the hardest ones to access funds, but also, again, where the alternate industry will be most open-minded to these clients. So they're the guys who have been fully impacted with full shutdowns or lockdowns. So no trade, but expected to return to full trade. So that just gives you an idea on where industries sit, and just when you're thinking about how easy is it going to be for me to get this client money, just think about those 3 things, post and pre-COVID. Also, just to give you an update on our approved participants. So as you heard from Franco today, it's very exciting for us that our partners at Prosper are in trial at the moment with their SME guarantee product. Get Capital are already out in the market, and we're really excited that also Moola, Lumi, Banjo, Speedy Finance and OnDeck have all been approved as participants in the SME guarantee scheme as well. So great that all of these guys were obviously on our panel to give you a one-stop shop for access. But again, you know, and Peter mentioned Alex before, but certainly for us, one of the things that stuck in my mind that Alex has spoken to me about over the last couple of weeks is the best thing about the guarantee scheme is that the alternate lending industry has been recognised, and this can only create wonderful things for us moving forward. So let's try and wrap it up. I want to make sure I don't go too over time. So why the Lend platform? Today, the Lend platform is the fastest and most sophisticated platform for Australian business finance brokers. It automates the process of matching a lender to a SME and uses a sophisticated combo of AI and analytics. And it does this with all of this without blemishing your client's credit score. So it's intelligent enough to determine whether a customer can service the loan they want. It's a single application facility, so even if you have a lender of preference right now, so if you're a Prosper champion or an OnDeck champion, then you can still continue to send those deals to those guys first through our platform. What it does mean though, is that no one can approve every single deal. So what do you have to do when your lender of preference says no? New portal, new application form, new conversation. That's not required with the Lend platform. Instant analysis and the probability of obtaining a loan. Best lender match presents the most suitable lender for your client. Choose where you're going to send the lender to, or let the system do the heavy work for you. If the lender's unable to help, you can send it to the next lender without that new application form. Real-time status updates, end-to-end deal flow, serviceability calculators and simple CRM tools, and the process does not impact your client's credit file. The best thing about this, guys, is we pay your commission the same day your deal settles. The Lend Score. So brokers gain free access to Lend Score. It's a fully automated tool that provides you guys with a score on the likelihood of conversion of your deal. So we need the bank statements. We provide access to the bank statement. If you're not already using Illion, you can do it through our platform. So I'd love to have a chat to you more about the Lend Score, and just like a normal PD day, please feel free to reach out to me about any additional information around this fantastic tool. We also have Lend Size, which we can provide to you without the bank statements of your client. So we're looking at length of trade, industry, monthly turnover versus the amount you want to borrow. So we can provide this to you also without the bank statements. So Lend Size and Lend Score are two things as brokers in this market you can't do without. We're changing the industry criteria, we're changing the length of trade. Our lenders are letting us know this all the time. So it's a source of truth. Very quickly, here's a quick dashboard view. I'm not going to go into that now and let the guys wrap up. All your lead management is in here. This is an example of Lend Size, so it shows you which lender the deal is approved for and where you can send it. The Lend Score technology and the CRM tools are all in here as well, and the bank statement analysis that we provide you as a broker. Our lender profiles for education, and I'm going to wrap that up very quickly and just say thank you so much for attending the first PD day virtually. And again, thanks to all the sponsors for giving up your time, for the guys that are on here today. Appreciate you giving up that hour, and also to the FBAA, well done. I'm sure these will just get bigger and better. Thanks so much.
Thanks, Danelle. Owned it. Well done.
Thanks, Benny.
We'll move on to the next. Now you'll see a video from our sponsor, Credit Fix.
Hi, and lovely to be here to introduce Credit Fix Solutions and Credit Fix Lawyers. If you have clients who are currently suffering from financial hardship or maybe need to apply for deferral of loans, please feel free to contact our team, and our BDMs will be there to present to you today. Our email address is info@creditfixsolutions.com.au, and our national scenarios helpline is 1300 436569. Take care and stay safe.
All right, so we've come to the end of the session 1 Weekend TAS e-Summit. And before we finish the run, let me just close up by saying thank you for everyone who's attended and given us your time. We've a big thank you to all our national sponsors for their time and support. Please download their contact details from the PDF in the handout tab. Secondly, all the attendees will get a email with the code for your 1 CPD hour and a short survey. Please provide your feedback so we can ensure we are targeting your needs. Tomorrow, without fail, we've got another session 2 going on from 2 o'clock to 3 o'clock. So if you haven't registered, please do so on the FBAA website. There's a lot of other relevant content that's available on the FBAA YouTube channel that you can watch to grab CPD hours or register for the upcoming webinar via our FBAA website. So tune in, that's it for today. I think we've done great. Thank you for all your participation, and I wish you all a great day ahead. Thank you.